coming to you raw and unscripted. Beaming across Ontario and beyond to places like Angus, Concord, Grafton, and Honey Harbour. This is the Real Hickson Real Estate Podcast. Whether you're listening on your commute or putting on your suit, whether it's your morning stroll or you're on patrol, you just finished prayer or dropped the kids at daycare, you're in the bar, your car, or listening with the bathroom door ajar, near or far, this is the Jess and Giro Show. We're grateful for flattery and prone to inaccuracies. This is your guide to Toronto culture, people, events, news, but most importantly, real estate talk. Yes, hello folks, we are back. Say hello, Jess.
Hi. I haven't been here in a while.
Jess has not been here in a while. Jess, you've been, busy or something? With,
just a few
some
changes.
Other venture?
Just a side hustle.
An adventure of motherhood?
Yes. Full-time job.
Full-time job.
Plus.
And, the job is very rewarding.
Oh, yeah. It's great.
You receive treats every day in the nappies.
And
that's the
milk,
most rewarding part.
And milk-stained clothes.
Oh, the milk stocks? They're out at the Kendamil formula, the Enfamil, through the roof.
Yeah. No, I'm saying stains. I have all my clothing is stained by milk.
Stained by milk.
Yeah.
But it's adds character, right?
For sure.
It adds character.
Mm-hmm.
She is perfect. She is a perfect little girl and, a future member of
Hickson Real Estate
team. Yeah, I'm going to think about doing an unpaid internship shortly. Put her on the books.
Yeah, when she can hold her own head up.
Yeah, but she's so advanced, right?
Yeah.
She could do some accounting. She could do some cold calling.
Yeah.
With her fake phone. I'm sure she has some baby networks.
Yeah. Bunch of 2025 babies getting together.
That's right. Guys, it is the last episode of the year. I know we've had a little break since the last episode, but this is where we're at. We're doing the express advice for Q4 and bold predictions for 2026, Jess.
Ooh. Did we get anything right last year?
Well, I dusted off the crystal ball.
Yeah.
And I burned a couple of candles and made a couple of offerings, as you do. Mm-hmm. Then I came to the conclusion that I know just as much as everyone else, Jess, which is practically nothing.
Perfect.
And absolutely no one knows. No, we have some idea of what's going to happen.
Yeah.
But we'll break it all down. So welcome to the episode. And first of all, we're going to get into what's happening in great detail. But the latest news. Let's go through the latest news. The main bullet points, Jess. We've obviously seen a change in government this year, and obviously it's a huge topic of conversation. And one of the key movements for the government is housing and how they're tackling the housing affordability crisis. And it's really a little early to say what's actually happening. They have all these plans. They're signing these deals, but Mr. Prime Minister, Mr. Carney. He's doing a lot of other stuff with trade deals around the world. I mean, I guess the subtext to this whole thing is that we are seeing a huge rejig of the entire world dynamic of trade and the way things are going. Mm-hmm. And that's obviously left a lot of things uncertain this year.
Our favorite word.
Our favorite word, uncertainty. But with this comes, let's see what happens in 2026. I think it's going to be at least the first half. I think there's an election coming up potentially. They want to get majority government to try and push some more things through Parliament. But essentially, we'll see what a lot of these plans are actually going into motion. Let's see. And let's do a little bit of an audit middle of the year or whatever and rate their performance. But the idea is this. There's a large focus on purpose-built rentals in the GTA, Jess.
Yes, definitely.
So, this is the demand for rentals. I mean, it's crazy to compare it to, the 80s or the 90s. I think the numbers were under 10% for rentals, for rentals to owners. And now we're over 50% of the GTA is being rented.
It's so difficult to get into the market.
And as we know, since the pandemic, we look at the stock market and investors and holding companies and all that kind of stuff. we now know that a lot of these companies, American included, Canadian included, they are purchasing properties with the idea that you will just be renting it out forever.
Yeah.
And so this leans into the other subtext of what's going on in the next couple of years is that we will still have inventory issues. Mm-hmm. You know, the market is a lot softer this year. Yes, it could continue to soften. And, we'll round out those predictions in this episode. But the idea is by 2027, 2028, there actually may not be any condos to buy.
Brand new ones,
which is crazy. And the inventory could dry right up. And especially if these developers are, instead of building a condo where you and I or anyone listening could go and buy one, there's not going to be an opportunity to do that. Mm-hmm. It'll be property management companies that will be owning this and never going to sell it unless, the dynamic shifts again, but they're going to be renting it forever. So the other big storyline in the news is that the Bank of Canada, as of a couple of weeks ago, have held the interest rate. Okay, we're pretty sure that unless something else drastically changes, that we've seen the end of the interest rate dropping.
Yeah, as of right now.
And what was the message you got from them, Jess?
They want to stay stable. Holding the rates makes people feel more comfortable that there's not going to be big shifts in either direction. A big drop or a big increase kind of steadies everyone's hand. Mm-hmm. And I think the mentality of a lot of buyers out there and people that may be listening is, it'll get better tomorrow. Mm-hmm. I'll just wait again. It'll continue to get better. Wait. And then that's if everyone's
true,
playing that game.
Yeah, I mean, that's true, but eventually, this is all cyclical. Like, the question is always, like, have we found the bottom?
Right.
We didn't know, back in 2021, we didn't know that was the peak. We could, guesstimate. We could be like, okay, this is crazy. We all said, this is all crazy, but, it could have just kept going up,
And it did really quickly.
And it did. And, and it really has taken a long time to come back down. Anyone out there is talking about, the bubble bursting. There's no bubble bursting. It's just gradual, just like the cost of living has gone up gradually over the years. Mm-hmm. The same thing for prices coming down. It's a slow cyclical thing. You want to compare quarter to quarter or year over year. That makes more sense.
Yeah, but of course, there are outliers. There's, I saw this house go for $100,000 less than they bought it for, or I saw this condo take a huge hit. Yeah, there are cases that people are in situations that they take, something less than they should have maybe, or, what we think it was worth, but it doesn't mean that it's happening in every market, because I'm seeing still houses sell for good numbers and condos selling for good numbers. It's just, it almost is like neighborhood specific, property specific.
Yeah, I mean, it's hard to take one data point and be like, that's the whole market. Yeah. Right?
There's always going to be little crazy things happening. There's homes selling still $400,000 over asking, I bet.
Yeah, exactly.
You could find one.
It's really about the balance of the seller's expectations lowering to a more realistic number, and also the buyers, not being convinced of I can get a better deal tomorrow if I wait.
Yeah.
Okay, in some cases, 100%. If you wait tomorrow or in a week or in a month, you can get a better deal than today. But in some markets, some of these homes, they're well priced. The reality is we still have an inventory issue. It's been weighing on us for many years because the previous governments, and I'm not talking about the current ones, and I'm not even talking about in the last 10, 20 years. I'm talking about since the 80s, since the 90s. I don't think they saw this coming, or at least they didn't prepare for it.
Yeah.
So now we have this, And then I've always said, in America, it's completely different. This city's hot. Like Houston, Texas is hot right now. Or Florida's super hot.
Yeah.
San Francisco's not hot anymore, but it could be in 10 years.
Yeah.
There's so many choices and so many major cities. And, it's so interconnected that anyone could really move anywhere. But the reality is we just have Toronto as the major city. Yes, there are some minor cities that are emerging in Canada. And I think it will change as, the government is looking at fixing these loopholes or barriers for trade interprovincial. All of a sudden, now we can get an electrician that lives in New Brunswick that's like, I'm out of here.
Yeah.
And he can move to Quebec. He can move to Manitoba if we really want to. We're going to have the shifting. It opens it really up. And then maybe we'll see some other major cities or some minor cities, really, really emerging. But that's kind of it. And the subtext, as Jess said, is they're just trying to remain steady. They're trying to steady the ship. They're trying to convince people that this is like going to be the status quo.
Yeah, this is what it looks like for the foreseeable future.
Yeah.
If you need to make a move, don't hold on the hope that something's going to be drastically different.
Yeah. So let's look into them specifically, as we always do in this Express Advice. The rental market has really, really, I don't want to say dropped off a cliff because it's been dropping for the last quarter. No one really wants to move in wintertime. That's just a reality. And so, there are still a lot of rentals out there. The main, I guess, subtitle for this year's market has been, yes, the softer market here and there, but a lot of people have put condos and homes for rent as well as for buy. And obviously the rental market has been a lot busier in the last couple of years, so that makes sense.
Yeah, and if a seller feels like I'm going to take a massive hit and I don't need to do that right now, like let's just wait it out.
Yeah.
Hold on to the property, rent it out for the next year to 2 to 3 years until things are a little bit more in their favor.
Yeah. Or it's investors that are like, man, I'm taking a hit for like leaving it on the market. I can't sell it. Let's just rent it instead.
Yeah.
Yeah. So that's there, and that kind of ties in the landlords as well. I mean, there are a lot more options for people now, and I think the people that are looking for rentals, they don't necessarily, their mindset is not stuck in downtown core.
No.
You know what I mean? Like, people are like, I could live out in, as we're seeing in Vaughan, in Concord area. If anyone's not aware, this is where the new Vaughan Metropolitan Centre, the subway line has gone to. So, we're seeing this infrastructure get built out. The LRT is like getting finished? Question mark. Like, some of the lines are starting to open up, which is interesting, and that's going to change again a dynamic of like the mindset of I don't have to live right downtown. We did see a lot of people move back to the GTA and continue to. I mean, it's a magnet for work and especially with the economy we're in, right? But the reality is people can live outside the GTA and still commute to work, and that's a very normal thing. And they don't necessarily have to live right downtown.
Yeah.
So
as long as you're close to a transit line. Yeah.
I mean, that's the focus, is being close to transit. And, I deal with, Australians moving here a lot, actually, at the moment. And they don't mind living near Downsview. Is anyone listening? Do you know where Downsview is? Like, a lot of you do. Some of you don't. That's where the new failure of a stadium has been put in. And people complaining about that. But anyways, the idea is, like, there's new opportunities for like hubs or areas that are being built out. A lot of the programs and developments that were in the works in the last 7 years are getting finished. We're definitely seeing a shift in the rental markets, really, really chilling out. For first-time home buyers, Jess, what would you say to a first-time home buyer right now?
There's so many opportunities. It's just such a good time to consider it, especially if you're renting. If you're spending the money renting, then there's a chance that you can get a home at the same price, and you're building your own wealth and your own equity in a property. The condo market, as we know, is much softer, and there are opportunities to get in. And then even townhouses and detached homes that were once out of reach are looking a lot more in reach.
Yeah, prices have come down a lot. We're kind of looking at like 2018, 2019 prices. That's the reality. Mm-hmm. No, we're not going back to 2010 when condos were like 100,000. Mm-hmm. The new ceiling has been set. The new precedent has been set. The new floor has been set, if you want to talk about it in terms of stock market indexing kind of terms. Mm-hmm. And like, again, the sentiment, yes, it could be better tomorrow. It could be better next month. But at some point, a lot of my clients, they're saying, we'll look at it in 2026. And if everyone has that mentality, guess what that's going to equal, Jess?
Yeah, it goes back to the craziness. I think there'll be a couple blips of that, to be honest.
Yeah, I think so. And again, it takes so long. I say this all the time. It takes so long for the prices and stuff to come down. And it really just takes, from a mentality standpoint, if you're looking at 10 properties and all of a sudden 3 of them are sold conditional, you're like, oh, yeah, things are moving.
Yeah.
All of a sudden, out of the 7 that are left, you're like, oh, I didn't really like that one. You're being picky, right? And obviously, and you should be picky, but as soon as the market shifts, all of a sudden you start to lose a little bit of leverage. And what happens on the selling side is, I had 9 other competitors, and now I only have 6 other competitors. Mm-hmm. And that sold for a little bit more than I was probably expecting. Yeah. So all of a sudden, it just takes, because the information that we're receiving, the public side from Realtor.ca, and the agents receiving this information, it's quick. It's not like we're waiting weeks and months for this information to come through.
No, things can change week to week.
Yeah, so they are reacting, and that's how we see market shifts. So whether it's like a huge spike and then it chills out again, or whether it's sustained, we don't know. But we just can expect probably, like we saw it in actually November, we saw a little spike. We saw a little rush to the door.
Even in April.
Yeah, even in April. There's different parts of the year where you do expect it, but there is like little micro markets in major markets.
Yeah.
So that's the kind of first-time home buyers. Now, the big thing is, in relation to interest rates, lock in your interest rate. Even if you're not ready to go, hopefully you've already been to a mortgage broker, and that's always the first point of contact. Go to a mortgage broker. You're silly if you don't. If you're thinking about buying in the next 5 years, go to a mortgage broker. Yes, things can change. Your employment can change. Your credit can go up. It can go down. But start a file. It doesn't cost you anything. And you at least have an idea of, what is possible? Am I a million miles away from owning my first home? Or am I a lot closer than I thought I was? Okay? And in saying
Or how to get there.
And that's what these mortgage brokers are good for doing. And obviously, speaking with us as well, we kind of set you up. I have a first-time home buyer planner. If you need, it's a good resource to get you thinking about, planning for your future. Because that's the reality. Everyone in real estate, anyone, whether they're downsizing, investing, you need to be planning 5 years ahead. And it's really hard to do, right, Jess?
Oh, yeah.
What's going to happen for us in 5 years? Another baby? Who knows? Oh my gosh.
Let's start with this one.
Let's start with this one, yeah. Let's, we'll do a performance report on that.
Yeah, we'll talk about it in the next quarter.
So, and for right now, the micro market of interest rates is, they're actually increasing a little bit, the fixed rates. But please, this is always going to change. This is cyclical. This is month to month. This is quarter to quarter.
But also understanding that the rates changing by a little bit isn't costing you $300, $400 extra a month. Like, it may be $20 or $30.
Yeah.
So don't let these small things that you hear in the news affect your decision, because you don't actually understand until you run the numbers and see what your mortgage would look like, what your payments would look like.
Yeah. These news outlets, the people that pay and subscribe, they're most likely, majority of the time, people that own properties. So they like to post about this like dooming gloomy news, like, oh, it's a horrible market, but like, for who though? For first time home buyers, this is the best market we've seen in 5 years for first time home buyers. Oh, I should have bought something in 2018. I should have bought something in 2019. Guess what? You can. And you know what? The interest rates were probably higher than they were now. Like, I think, if you go back far enough, we were looking at 4.5s.
Yeah.
There was like the norm. And right now, if you're lucky, you might get under 4. But the idea is there. Do your homework, do the research, plan for your future. Now, this is kind of the same message for upgraders. You've already been through it once. Now, the problem for upgraders is I can't move because I can't sell my condo. Mm-hmm. Right? And that's fair. However, we have seen little shifts. Inventory has been dropping for the reasons we mentioned, for the fact that things have leased. Some buyers have come back into the market. And, if you have the opportunity and if you temper your expectations on the sell side, you take a little hit. We say this all the time. What you're buying, as long as it's more expensive than what you're selling, then you're doing relatively better. And
it makes sense to you if you can get out of a condo and remove maintenance fees from your expenses, and you can get into a freehold property, and that makes more sense for you. Or you can get your family is growing and you need a bigger space. You know, sometimes it's not just a financial move. Sometimes it's your lifestyle. You changed jobs, or your kids need to go to a different type of school.
Exactly. I mean, you know, for example, you're currently working in the den in your condo. Great. I mean, it's a space and it's fantastic as a starter. But imagine you moved into like a townhouse and all of a sudden your office has a big window, or it's like a room in the back, or it's quieter for meetings, or it's a more creative space, or you're more inspired. I mean, these are the intangible things that you can think about investing in. Oh, I want to invest in my space. I want a bigger space. I want, you know, I don't want the dishwasher to be heard on my Zoom meetings when I'm speaking to my boss. You know, this is the other type of investment, like investing in your life. Well,
there's more to real estate than just the financial aspect. That's in the last few years, of course, you could make a quick buck because things were going up in so quickly, and now this money was to be made. But like at the end of the day, your home is your home, and it should fulfill more purposes than just financial gain.
That's right. So that's the sentiment for upgraders. If we look at kind of the new build, new construction, I mean, you know, nothing much has changed except gotten worse in that department. As we talked about, you know, developers are looking at developing rental purpose buildings. You know, things are still getting built. Things are still selling. And, you know, if you have the stomach for that market, obviously there's insane amounts of deals out there. There's the pros and cons to all of this. The cons that some projects are getting delayed, having a guarantee that like, oh, if I buy this, will it close in time? Or, you know, that's always going to be a risk. And of course, this is not for everybody. But the pros, if you do have the risk appetite for new construction, pre-construction, you know, there is the most insane incentives right now.
Yeah, but you're also not just referring to condos. Like, people buy freehold new developments, and they're in, you know, emerging spaces, like different areas out east or up north. There's a lot of homes being built that are built by reputable builders, and
and it's worth mentioning that the new development is first-time home buyers with new construction are getting a break on the HST.
Yeah.
So that's huge as well. I mean, we're talking about tens of thousands of dollars here. So that's, you know, these are incentives. But of course, this is all a bigger conversation. It's complex to talk about, and we can't solve it for you, you know, in a one-way conversation on this podcast. But please, if you have any interest in new homes, I mean, they're beautiful. We lived in one. We bought one. Stunning. You get carry-on warranty. Yes, there are a few, you know, interesting upfront fees, but it's so nice to live in something that no one's lived in before, right, Jess?
Yeah, nobody's used your toilet.
No, I think the builders use the toilet.
Oh, don't say that.
Okay, and then, you know, similarly for investors, I mean, there are still assignments out there. The reality is, if we're looking at like buying resale for investors, we are just, with the prices coming down and the rents still relatively high. I mean, the rental prices are coming down as well, but I'm finding there are some cash flow positive properties out there, Jess.
Yeah.
It is. I mean, the other factor is maintenance fees have increased since the pandemic quite considerably, but, you know, on a case-by-case basis, I'm seeing a lot of properties that might break even, and some properties that could actually be cash flow positive, you know, as long as the vacancy rate is low, you know, as long as you keep it rented, and it's something that, a person's going to be like, okay, I could live here, and then after they're like, I gotta go. Yeah. Someone that, you know, ideally you have them in there for a few years, but of course there's like pros and cons to that system, where when someone leaves on their own accord, you can raise the rent, et cetera, et cetera. So, you know, how does this compare? Well, in the last few years, there was just not a lot of properties that were breaking even at all. You know, it was a new norm of, how much is this going to cost me to carry?
Yeah.
You know, and then relying, what your payoff is the equity in the future. But of course, with that, in the last few years, if people have been buying at the peak, they're starting to hurt right now. And that kind of feeds back into this story of
letting go of the property.
Yeah, letting go of the property. But that's, you know, that's investors. And as we mentioned, it's good for like first-time home buyers, people that are looking for the inventory to soften and grow in that regard. So that is kind of the investors. Again, it's a case-by-case basis. I think if you're open to other areas around the GTA, there's some really exciting and amazing opportunities. And then that just leaves us with the downsizers, Jess. The downsizers. Mm-hmm. You know, the latest stats in the last quarter of this year, and, you know, interpret this any way you want. There are more people purchasing properties over the age of 70 than under 35.
Yeah.
What does that tell you, Jess?
That the people in the 80s, they had a much easier time than us.
They did. And, you know, some of them might be moaning and groaning, oh, I'm not getting $1.9 million on my home. I'm only getting $1.4 million on my home. But what did they buy it for, Jess?
Yeah. They're still doing okay.
500,000 or 600,000 at the, you know.
Yeah, but at the end of the day, this money is the retirement fund for a lot of people. So yes, of course, you want to get as much money out of the property as possible and into the next property at a reasonable price, so that there's the money to live on. Yeah,
and it's interesting. I mean, there are some areas in like rural GTA that are, you know, they saw a very inflated market when people were kind of convinced to move out of the GTA and they could still work, and now everyone's coming back in. I wouldn't say a crash, but definitely a depression in these far like cottage areas and kind of rural areas.
The places that are too far to come back and forth to work.
Yeah, and you know, where are these people going? I mean, that's a good question. I think there's if we're to talk about retirees and like late life retirees, we're talking about retirement homes. I mean, I think there's a huge lack of retirement homes.
Yeah.
I think that's where we're seeing a gridlock. There are, you know, little condos, low-rise condos getting built in Barrie, for example, or getting built up in, you know, the cottage country areas where people are like, I could retire up there.
Yeah.
And now I want to avoid the stairs. You know, stairs is a huge late life challenge. You know, bungalows, we've talked about this before, bungalows not really getting built. If anything, the developers are building a lot more townhomes, kind of closer, you know, higher density townhomes, executive townhomes as they might be calling it. And that equals stairs. So what are the options that these retirees have? Well, the detached market, I'd say it's balanced, but you know, these are the people, the retirees that are selling their big old homes that they just don't want to clean anymore.
Yeah, or they don't need. It's only a small family left.
Yeah, and they're looking for different retirements. Maybe they're flying to the U.S. and retiring in their Florida homes, or you know, whatever it might be. The snowbirds, or even, you know, Kelowna. Kelowna, believe it or not, guys, is one of the hottest markets, micro markets in all of Canada this year, and that's indicative of what I'm saying. Is people are really thinking about, okay, retirement. Like, we're seeing the baby boomers retiring now, which is a huge class.
Yeah, it's a massive group.
Yeah, and we're seeing this like large transfer of wealth. If you're looking for, I got to sell at the right time, it's really hard to time it. There are pros and cons to selling at any moment. You could be waiting, I'm going to wait for the peak again in the next few years. Okay, fine. But also, like, if you were looking to move to a condo, again, as we mentioned at the start of this, you know, you could see much tighter inventory for condos, and all of a sudden you could be competing, which is like the last thing you want when you retire, right, Jess?
Yes.
Yeah. So right now, if you were to decide to downsize, there are people buying detached homes, but there is a lot more flexibility on the buy side where you end up. So that is my advice to the downsizers. Plenty of opportunities, maybe not the number you wanted, but, you know, it's a correction to a correction to a correction, right, Jess?
Yeah, and if it makes sense for your lifestyle. That's the main takeaway, I think.
So, I think we've covered it all. Jess. You know, always, as we said last episode and the other previous episodes, you always deal with the information you have in front of you, okay? It could get better, but it also could get burnt by, you know, changing markets, shifting things.
Yeah.
And that's the main takeaway. Let's all hope in 2026, this is where the Christmas music comes in.
Yeah.
The holiday music. It's very inspirational. But anyways, guys, 2026, it's going to come. It's going to be a chance for renewal. We're going to stable the ship. We're going to be more certain, Jess.
Yeah, let's bring in some certainty.
Let's bring in some certainty. And some precedented times. Some people looking for a soft year out there, am I right?
Yeah.
And be grateful for what you have, and more so for grateful for everything we have.
Yeah, if you hear a little piggy in the background.
Yeah. Happy holidays. Merry Christmas to all those who celebrate it and all the rest.
Exciting 2026 ahead.
And let's manifest. Let's look to the future and try to understand the future of AI and all the other buzzwords that are coming our way.
And enjoy the time with your family.
Enjoy the time with your family. Drive safe. And don't have too many eggnogs. Don't have too many. And we'll see you next year.
Bye.
Bye.